Good day, ladies and gentlemen, and welcome to the show. I'm glad to have you guys here. Today is the 30th of December, 2019. Listen, guys, there's not much left of 2019. We're rapidly approaching 2020. And what's the scene going to be like? What's the outlook for 2020? As far as cryptocurrencies are concerned, I think this is going to be a massive year for Bitcoin and the cryptocurrencies. And you know what? You guys think that I'm pro cryptocurrency, pro Bitcoin and everything. I'm not. There's a reason why I'm not, and I'm going to explain to you what the reason is. It's got to do with financial disruption. The regular financial system and the central banks have mismanaged the financial system, and this is why we see the rise of Bitcoin and the cryptocurrencies. At a certain point, now, Bitcoin and the cryptocurrencies are like a monetary black hole. They are deflationary. In fact, gold and silver are the only other deflationary currencies. But they've manipulated the price of gold and silver through futures contracts to make it inflationary when it's actually deflationary. So if you take the real gold and silver, the physical gold and silver, it's deflationary, and it's still, even with them manipulating it, trying to make it inflationary, it's still deflationary, and we still see a rise in the price, a slow rise in the price over the years, where the dollar has slowly been disintegrating. The dollar's lost 97% or more of its purchasing power. At the same time, the price of gold's doubled and doubled again. And this is with them creating futures contracts to try to inflate the price or inflate the amount of, say, when they create a futures contract for gold and silver, they make it seem like there's more gold and silver than what there really is because they create paper gold and silver. And they flooded the market, completely flooded the market with paper gold and silver to make it seem like there's more real gold and silver than what there actually is, to keep the price down, to make it inflationary like the dollar. Because they print tons of dollars, they print tons of futures contracts for gold and silver, and they're trying to keep pace with the dollar, and it's the dollar's disintegration. They're not going to be able to in the end, because we all know that the real gold and silver is going to be in short supply. There's going to be, at some point in the future, especially with silver, there's going to be a failure to deliver, or multiple failures to deliver. Or the whole thing is just not going to fail to deliver. I mean, there's not going to be any available. Now, that means that the currency itself, which is gold and silver, is actually deflationary. Well, Bitcoin and the cryptocurrencies are highly deflationary, and it's much harder for them to print futures contracts for Bitcoin because there's a known set amount that can never be bypassed, 21 million Bitcoins. That known set amount makes it hard for them to harder for them to manipulate the price other than gold and silver. See, with gold and silver, there's no set amount. There's how much is in the ground. How much is stored away in vaults? Nobody knows exactly how much gold and silver there is, but we know exactly how much Bitcoin's out there. See? And this makes it even more deflationary. So the reason why I don't like Bitcoin and the cryptocurrencies is because we have a financial system and we have a world in place that's set to operate, to function. Okay, it doesn't function the best in the world, but it provides for all of us. When you go to Walmart, you got stuff on the shelves you can buy with the currency. You can go and buy food and everything else, and we're surviving. We're alive, and we're surviving. But if the financial system is utterly and totally destroyed, if you take out the dollar and you take out all of these fiat currencies suddenly and try to replace them with something, it's like pulling the rug out from underneath somebody. Down everything comes, and the disruption that it can cause Well, there's no other way I can explain it except it can cause chaos. And this is why I don't like the cryptocurrencies, because I see them as a monetary black hole that could lead to this chaos in the future when a transition is made over a value from the fiat monetary system into the blockchain monetary system. This is a big worry to me, because that transition, if it happens too fast, well, it could be tremendously disruptive. And that might be an understatement of how disruptive. So I don't want to see that disruption. And that's the reason why I'm a little bit like, I hold back. Like, you kind of look at Bitcoin, you say to yourself, hey, you know what? If you're a logical person, you say to yourself, you know what? This thing is going to win in the end. It started in 2009, which is not very long ago. And look at how big it's grown. And look at what potential it has. I'm going to tell you, I don't see that potential in gold and silver. It would be a move backwards for society to adopt gold and silver as a means of payment across the internet. I mean, how would you do that? You know? You can't, it's in the real world. You need something virtual to do this. And Bitcoin is the ultimate of this virtual currency that's able to move seamlessly across the internet almost instantaneously. You know, the first time I used Bitcoin in a wallet, I seen what it was and how it works and how there's a hard limit of 21 million and everything. And it dawned on me, and I come to a realization. I said, this stuff is going to take over the world. At a certain point, I came to that realization, you know? And so I don't think there's any real stopping it. Unless there's some sort of a huge computer malfunction or the internet goes down. But you know, if the internet goes down, we're all messed up too. Because now we're totally and 100% dependent upon the internet. Okay? So this has been a little bit of a rant of mine. Let's get the chart started right here, and let's take a look at what's going on. That's the reason why I'm not 100% for Bitcoin, is because I'm worried about the disruption that it could cause if there's a major move into cryptocurrencies from the regular fiat monetary system. Okay? But in a nutshell, that's why I'm worried. And I'm worried that that's really going to happen. I think it's really going to happen at some point. I think there's an inflection point there, a line that we cross in the sand where Bitcoin's going up in price and the dollar's going down in price. And all of a sudden, investors around the world say, hey, you know what? Bitcoin's the best performing asset class this year, and we're looking for yield. And we can't get it anywhere else. And they all start piling in. And when they all start piling in, they create a snowball effect where they actually create the scenario that they're actually looking for. In other words, they want yield, and all of a sudden they all pile in, and then they see the yield. It's like a self-manifesting, you know, they're manifesting their own destiny by all piling in. They're going to get the yield that they're looking for. And there's going to be no yield anywhere else, and this could make a move. And this is what worries me, that the whole of them could all pile in at once. And that transfer of wealth over into cryptocurrencies means, like, I'll give you for instance, to help explain this to you guys. Pretend a guy goes out and he's got $1,000 in his bank account. And he goes out and he buys $1,000 worth of cryptocurrency. Well, when that money was in his bank account, it had a net velocity of 0. That $1,000 sitting in the bank. Say it had been sitting there for 5 years. He'd been saving that $1,000. Suddenly he spends it on Bitcoin, right? What happens? Well, that $1,000 goes right through the Bitcoin, goes into the pocket of the person that sold him the Bitcoin, and on the way home from work, that guy that just sold him the Bitcoin for the $1,000 goes out and buys new tires for his car. as part of his profit for say he mined that Bitcoin. Suddenly that $1,000 that the guy was saving in his bank account wasn't moving, yielding a velocity of 0, suddenly it starts changing hands through the general economy. What that does is it speeds up the economy, but it speeds up the velocity of money, which has been extremely slow. As the velocity of money goes faster and faster, the net value of what you can purchase with those dollars goes down, while Bitcoin is going up in price because the guy that bought the 1,000 Bitcoin, remember him? What's he going to do with it? Is he going to spend it when it's going up in price? Is he going to buy coffee with it? Is he going to buy tires with it? No. He's going to store it away and HODL it. That's why he bought it. So the velocity of Bitcoin goes down. And this effect could be extreme. In other words, the velocity of Bitcoin is dropping. The network transaction volume is dropping for Bitcoin, while the dollar is speeding up, going in the opposite direction. And one is going down in value, the dollar, and Bitcoin's going up in value daily. This leads to an even more slowing of the velocity, because nobody's going to be selling them. I mean, who's going to sell their Bitcoin? If the price starts going up daily? Just say next year. Say we move into next year, and at some point, maybe March or June, something happens in the financial system, and the Bitcoin starts to go up in value. And I mean seriously go up in value. Well, everybody's been anticipating this big move up in the price of Bitcoin. They all talk about $200,000 Bitcoin or whatever. And when they start to see it happen, what are they going to do? Are they going to go out and sell their Bitcoins when they're going up daily? Nobody's going to be selling. The velocity's going to slow down. The only ones you're going to have out there is people who are desperate to buy them. At the same time, because of everything the Fed wants to do, the Fed says, oh, we got this inflation target. We want inflation. We want inflation. At the same time, they're going to get their inflation. And they're going to get it in diamonds. They're going to get tons of it. They're going to get heaps of it. It's going to be like rain falling from the heavens. Unending inflation. If this transition happens too fast and too much money moves into Bitcoin, it could cause the whole system to collapse. And as the system comes down and collapses, the disruption it could cause is going to have an effect on normal, everyday people out there. And it could be severe. And this is the reason why I am not on the Bitcoin train. Everybody thinks I'm on the Bitcoin train. I'm not on the Bitcoin train. I'm like, okay, I see what's happening with Bitcoin here. Right? And I'm showing it to you guys. I follow Bitcoin. I'm a Bitcoin news channel. I cover the Bitcoin story because this could be the biggest story of the millennium. This is a new invention that's come along from nowhere. Nobody even knows who invented the thing, for crying out loud. And it's trying to take over the world. It's trying to quite seriously become the world reserve currency. And the dollar's sliding downhill. It's going out as a world reserve currency. What's going to replace it? They talk about this and they bypass. If they mention Bitcoin, they ha 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 ha. Oh, Bitcoin become the world reserve currency? Ha ha ha. Come on. And then they go back to talking about how the yuan might become the new world reserve currency. And then they end up saying in the end, well, we can't see anything out there that'll become Bitcoin's over there in the corner yelling, I'm going to do it. But they're not listening. It's like they can't believe it. They just can't get their head around that Bitcoin could actually become a world reserve currency. But I see Bitcoin's potential. And I'm not laughing. But the disruption Bitcoin would cause to become the world reserve currency would be absolutely enormous. Because we're set up for fiat currencies. Everything's set up for fiat. How do you make that transition suddenly over into cryptocurrency without tremendous disruption? And if you get tremendous disruption, then it's going to have a negative effect on all the people out there. You see? How bad of a negative effect? This is a big question mark. I think it could be tremendous. Anyway, let's take a look now at the cryptocurrency price. 193.7 billion in the whole industry. So see, it's starting so small. It's like a seed. But right now, it's well watered, the seed. You know, it's got fertilizer. It's got everything it needs. It's got good ground. It's got good sunlight and everything else. But we haven't seen any real growth in a long time. Well, you know, I've seen seeds like that in the ground oftentimes, or you know, and then all of a sudden they'll just take off. They'll take off because the conditions are right. Well, that's the way with cryptocurrency right now. The conditions are right in the financial system for this thing to take off, but it hasn't really taken off just yet. Maybe it's putting down roots we can't see, and them new buds aren't shooting up yet because it's putting down the roots. But that's what I think's going on. Let's take a look at the silver price right here. Silver is $17.89 today. It's up 16 cents. Now, I'm going to tell you something about the silver market. When this system starts to go down and the dollar starts to slide off into the abyss, silver and gold are going to disappear. The real silver and gold, the physical stuff you can hold in your hand, is going to disappear. Gone. Poof. Gone. And then the people out there, they're still going to have tons of this fiat that they want to get rid of. And they want to invest. And the stock market's going to be sliding to heck, going to be falling off a cliff. All of these other investments, corporate bond market sliding off a cliff, a money market fund sliding off a cliff. But they're going to look at gold and silver going up to the moon. And they're going to say, I want some of that, but I don't want the paper short contracts. I want the real gold and silver. They're going to try to get some, ain't going to be able to get any. And then they're going to be sitting there holding a wad of cash, and they're going to be saying, what do I buy? I can't get any real gold and silver. I know. I'm going to buy crypto. That's what's going to happen. So it's going to be gold and silver going to the moon first, but there's going to be none available anymore. And then crypto is going to come along, and it's going to offer itself, and they're all going to buy in like crazy. That's what's coming, guys. That's what's coming. Look at this article. Bitcoin now likely to revisit 6K after failing to break resistance. So what? Let it visit 6K. It visited 6K a few days ago. So what? Let it visit 5K, 4K, 3K. It doesn't matter the technological base underneath it and the roots that it's putting down. It doesn't matter. It'll just mean it's going to be the best performing asset class next year. That's what it's going to mean, as far as I'm concerned, because the lower it goes on this end, the higher it's going to go on the other end. The disruption of money. The rapid rise of cryptocurrencies has ignited a debate about the fundamental nature of money and the future of traditional banking and the financial services. While speculators have been flocking to virtual currencies with intense fervor, professional investors have largely taken a more cautious approach. Yeah. But you know what? When the professional investors do start to come in, they're going to come in all hog. It's going to be all hog. Anyway, listen. Thank you guys for listening. Remember to give me a thumbs up. It means a lot. I like to see a lot of comments, even if it's just nonsense, you know. Just say your nonsense. I like it. I love it. More comments, the better. Really, just say anything you want to say. You know, you got something on your mind, say it. You know, get those comments out there. I love seeing the comment section. Lots and lots of comments. And we'll catch you guys tomorrow. Bye-bye. Or on the New Year's. We'll catch you guys into the New Year's. Bye-bye and have a great day.